Lipson there in Canberra. All right, time for a check on fixed income and how it's been trading overnight, what to expect today and this week in Australia too. James Shillington from FIIG Securities joining us now. James, good to see you there. Yeah, we saw the impact on the greenback and on equities in the US there. Strong US new home sales data hitting a 5.5-year high. How's that impacted markets?
Yeah, good morning, Bridie. It looks like a really interesting session overnight. As you said, we had that really strong housing number and equities moved higher. But bonds did not react in the way that we normally expect them to in a risk-on session. We actually had US 2-year treasuries. They were unchanged at 0.32%. While the US 10-year, that was down 2 basis points in yield to 2.68. So bonds telling a different story to equities overnight.
And just in terms of the day ahead, obviously we've got a lot of focus on Qantas, whether it gets a debt guarantee from the government. What's expected in the day ahead?
Well, today we're focusing again on reporting season, and as you said, we will be watching that Qantas report quite closely. We trade a lot of Qantas bonds here. But the bond market has really gotten ahead of any announcement. We've seen Qantas bonds move about 50 to 60 basis points tighter in credit margin over the past 2 weeks. But we're looking at other names such as Ausdrill and PMP to report today. And we're also trying to position our clients around some of the new issuance flow this week.
Okay, any in particular?
Yeah. We had Bendigo and Adelaide come to market again this week. They priced a $500 million RMBS transaction, and we were acting some of the junior pieces. We also saw Queensland Treasury Corp. They did $1 billion of a 4-year floating rate note, and some of our clients have been quite active in that name.
Just back to Qantas, if I could ask you, because our guest host joining us in a few moments, Steve Goldman from Capstream, doesn't think that bond investors are priced in the fact that the government is likely to guarantee Qantas's debt.
Yep.
So, I mean, is there an opportunity here for bond investors?
Oh, there certainly is. We saw a big move wider in Qantas bonds earlier this year. They have rallied a long way. I mean, at the moment, the outcome will be binary. If the government does not step up with a debt guarantee, we probably will see a sharp correction in their bond pricing. So for our investors who might have gotten in early over the past 6 to 7 months, it might be a time to take that risk off the table and just crystallise some of that profit.
All right. Look at your analysis. Thanks so much for joining us this morning.